Good afternoon, everyone. My name is Samuel Dixon. I'm a senior here at North Carolina A&T State University, pursuing a major in user experience design, a minor in finance, and a certification in blockchain technology. And today I will be going over my Finance 355 investment class portfolio presentation. So, number one, we had two different competitions. We had a passive portfolio competition and an active portfolio competition. So to go over what I had in both. So for my passive, I invested into MicroStrategy, which I'll go into a little bit of depth of why I invested into this company a little bit later. It's an AI company, by the way. Nike, Nvidia, SPY, which is also known as Standard & Poor's Depository Receipts, Tesla, and then for my active portfolio, I had a mix of what I had in my passive portfolio, in addition to American Airlines, Best Buy, BP, Delta Airlines, Duke Energy, Norfolk Southern Corp, and Target. So now just to look at the overall chart from the entire project, the entire competition itself, in regards to my passive and my active portfolio. We started our both competitions on August the 30th and ended around the very end of November. And in order to get a look at the entire performance of the stock market, there is no one single pair, or there's no one single place that you can go to get an entire synopsis of the performance of the stock market. Therefore, you have to look at different indices in order to get an idea of what the stock market look like. There's no one single thing that can tell you all the data or all of the ups and downs of the entire stock market. So you have to dive into the S&P 500, which is the top 500 companies that are performing well in the stock market. The NAS 100, also known as the NASDAQ, is the top 100 companies. And then the Dow 30 is the top 30 companies that perform well in the stock market. So by what we see here, even though all of these charts look completely different, I saw more similarities in the S&P 500 and the NAS 100 when it came to which ones look closer to my passive and active portfolio trajectories. So this dip here aligns here with this dip in my passive, and also these two almost look exactly the same. But you can see that specifically this dip here aligns really well, and then also that recovery, that dip again here, and then so on and so forth with the uptrend. But that aligns a lot more than the Dow 30, which is only the top 30 companies in the stock market. So what did I learn from my passive portfolio? Number one, passive portfolios minimize stress and effort. I have a professor in the College of Business here in North Carolina A&T that creates a empty portfolio at the beginning of the year, and only uses the profits from that portfolio during the summertime when he takes his kids to Florida. So he pretty much just does this project almost every single year, where he creates a completely new stock portfolio, does fundamental analysis, technical analysis, behavioral analysis, to be able to put together a portfolio that's good for that time period. And he ends up with $20,000 to $30,000 each time, sometimes even more, to be able to completely just spend on his children and kids down in Florida. So me being able to do this project and come out the way I did, I can definitely see myself actually doing this in the real market, because again, this project, we're trading real stocks, so it's an exact replica of what's going on in the real market in real time. So me being able to see what I was able to do between August and now in November, early December, being able to actually reproduce that is something that I'm really looking forward to. Diversification through ETFs and consistently mitigating risk. I gave myself the opportunity to kind of give myself a base or a safe point or a defensive play by investing into SPY, which is an ETF of the S&P 500. So that if my balance goes off with the other stocks that I chose, that my portfolio could still in some way, shape, or form move with the trajectory of the top 500 stocks in the market. Long-term compounding outweighs short-term gains. Of course, you want to invest into both, but when it comes to short-term investments, there's a lot more risk involved. On the hourly or minute charts. But when you're making a portfolio and you're leaving it, you're doing your analysis ahead of time, you can get some super large gains when it comes to the end of that time period and what you can see when it comes to growth. Now, what did I learn from my active portfolio? Active management allows for greater potential returns, but involves significant risk and research. I will also mention that on the daily basis, getting up in the morning time to be able to see different reports about what's going on in the stock market and watching the news, being able to analyze charts, getting up when the stock market opens to look at different pairs when they first open, and then analyze the daily, the weekly, the monthly, but also the 4 hour, the 1 hour, the 30-minute charts. Look at any earnings that came out, current PE ratio, things like that. It takes a lot more involvement on the active day to day, of course. And that also relates to market timing. So making sure that of the time of day, making sure that you're trading in the right time zone. So if you're in the London session, making sure that you're looking at each individual stock and making sure that you're making trades at the best time possible. And a mix of both approaches provides the best balance, of course. So my top 3 trading strategies going into this project, when it came to the passive portfolio, this is when we first started the class. So we were super fresh to getting into this space, to learning more, piling more on top of my base knowledge. But I called my dad and I called one of my uncles to just get their opinion on what they would do if they were given an opportunity to have $100,000 and they could divide it into 5 different stocks and leave it alone. What would they choose? And so I was able to just listen to things that they said that they saw in the news about AI, about the fact that Black Friday was about to come up. Of course, this is in August, but going into the holidays and things like that, and being able to have a great balance of things that's going on in the world, things that they see, things that I see, no matter, but also taking that data and doing my own research as well to be able to determine the best 5 stocks that I could have chosen. But yeah, behavioral acknowledgement, diversification, being able to have a lot in the technological space is super important right now when it comes to having a successful portfolio, in my opinion, but also having energy, and then other stocks in the oil industry, gas. But yeah, pretty much just a diverse portfolio across all different industries will give you a stronger base in case one industry decides to fall. You'll have another one that can hold you up. And again, defensive moves such as involving yourself into the SPY or S&P 500 or the NAS 100, and different ETFs that have a great mixture of different stocks to give you a safer base in case another one crashes. So fundamental analysis, looking at PE ratios and earnings reports that came out, being able to go through that in class and be able to take that knowledge and apply it to the active portfolio was super impactful. Also looking at income statements and different reports that came out on Market Watch and being able to dive into those different charts to be able to see the trajectory of those companies gave me a strong base when it came to me deciding when to buy more of the stocks that I already owned when it came to my active portfolio. Technical analysis. I have a strong base in foreign exchange, trading foreign exchange currencies. So when it comes to looking at different charts on the daily spectrum, on the hourly spectrum, on the minute spectrum even, and analyzing the MSI, the MACD, and the volume of each individual stock, and also the candlesticks, being able to see and analyze and identify different candlesticks and what they mean also played a role into my active portfolio when I was getting up and looking at the best time to be able to purchase stocks. It's one thing to purchase a great performing stock when it's up versus purchasing it when it's low. Of course, you buy low, and sell high. So you may have a great fundamental analysis or behavioral analysis of what's going on with a specific company, with a specific stock, but if you buy it at the wrong time, you can miss out on a substantial amount of profits. So doing technical analysis definitely helped me more on the active portfolio side. Behavioral and economic analysis. I decided to combine this only because when I was going into things that I am involved in myself, I said I was going to go over MicroStrategy later. So this is me going over MicroStrategy. MicroStrategy is a AI company that's owned by a man named Michael Saylor, who owns 17,000 Bitcoins. And as of yesterday, actually, his company, MicroStrategy, purchased 1.5 billion more dollars of Bitcoin, which is 400,000 Bitcoins in total. And currently, as I'm making this video, Bitcoin is sitting at $100,000. So in my passive portfolio, MicroStrategy did a total of 200% from August up until now. Due to my involvement in cryptocurrencies and learning about NFTs and things like that, I just have a strong belief in what I have done previous research on in the cryptocurrency space, in the Web3 space. That's why I chose to invest in MicroStrategy. Looking at other companies like Nike, Best Buy, Target, Duke Energy, was me thinking about the time period that we're about to go into. So this is in August and we're going into the holidays. So we have Thanksgiving, we have Christmas, we have Black Friday. It's about to get cold outside. Duke Energy should be making some money from that. People are going to be traveling for Thanksgiving and Christmas. So Delta Airlines, American Airlines, Norfolk Southern Court is something that I thought of when it comes to transporting things across the world, especially in the time when the holidays are coming up. Packages are going to have to go from here to there. Resources are going to have to go from here to there. So me being able to just thinking about what's currently happening in the economy and what's currently happening in the world, and being able to decide why I'm buying these stocks. The time period played a huge point into just thinking about what's going on, what's about to happen. And that helped me get a base of what I wanted to invest in. And then, of course, doing technical and fundamental analysis of those companies helped me solidify my decision to purchase them and move forward with my decisions. Also, political analysis. I would say the most political analysis that I did in regards to my portfolio specifically has to relate to Tesla. So if you know anything about Elon Musk and this current past election and his involvement with Donald Trump, and if you're active on X, or AKA Twitter, or the other way around now, almost every time Elon Musk mentions anything, the volatility of Tesla just goes crazy. I would say Tesla is the closest thing to a meme coin in the stock market, but in a great way. They have super large spikes, so it's super volatile, and so that was a risky move for me to take for my passive portfolio, but it was definitely needed because it did hold a lot of percentage. But he's heavily involved in the political space, so that's why I chose to invest in Tesla. Lessons learned. There are tons of different resources that I was able to gain by Dr. Dodd in this class, in regards to diversification, in regards to doing technical analysis, looking at earnings reports, and just everything that he was able to break down in this class definitely played a huge role into me applying it into my actual life. So will I continue? Yes, this class was definitely worth it. And I hope to be able to work with students in the future, be able to duplicate what I was able to accomplish in this contest. So thank you guys so much. This is my school, personal, and LinkedIn account. And thank you guys so much. Have a good one.